From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome to a special edition of Bloomberg Technology. I'm Caroline Hyde, right here in Las Vegas. We are live from the HumanX AI conference. And we're going to be talking to some of the biggest industry leaders and decision makers in the AI space throughout this next hour. As you can see, a key lineup of expertise, but we get into these public markets because the anxiety builds around yet further tariffs, the geopolitical fallout, as we see a national state of emergency declared around electricity, as we're concerned about further tariffs on goods coming in from Canada, the metal space, Nasdaq 100 off by 0.8%, Nvidia down once again, we're down by 0.6%, Oracle's numbers not living up to expectations when it comes to data center potentially, Tesla higher by 0.5%. Remember, this sank more than 15% yesterday, but President Trump says he's going to be buying a Tesla, as he sees some of the concerns surrounding Elon Musk and how it is feeding into the demand side that UBS picked up yesterday of Tesla's cars going into the full year. But let's move on to also the discussion of how the public markets feed into the private markets. How does one think about the startup space as we contend with this growth anxiety, as we contend with tariff anxiety? Let's bring in Alfred Lin. Sequoia Capital Partners, someone who thinks about seed, about early stage investment, has been at the forefront of artificial intelligence investment before many others. And Alfred, look, how does the public market feed into the private market from your perspective right now?
Well, Caroline, thank you for having me on the show. This is a great honor to be here. To answer your question directly, we just think about building great companies and partnering with great founders and helping them from idea to IPO and beyond. And so in terms of thinking about the public markets, we just think about much, much longer term. We work with founders at the idea stage. In a decade, that company can then be worth $1 to $10 billion. In 2 decades, it could be worth $10 to $100 billion. In 3 decades, like for NVIDIA's case, in Google's case, in Apple's case that we backed very early on, they become potentially $1 trillion company. And so yes, markets can go up and down. There might be sort of bumps in the road, but I would just encourage your viewers to think about the long term. And when you're behind a megatrend such as AI, it can last for a long period of time.
But that megatrend needs infrastructure and it needs electricity and power. That's one of the key anxieties of Andy Jassy, for example, at Amazon, saying his constraint on AWS is power. Is it something that your CEOs are contending with, how to ultimately sustain their growth paths?
I think it's something that they think about, and it's something that we need to work on, and there are a lot of great minds working on it. It's not something that I'm an expert in, but you're right. Power is something that we need in data centers, and the bigger the data centers we've built, the more powerful the models we've been able to build, the more powerful the applications, and so I'm sure it will get solved.
What's so interesting is, of course, you mentioned how Sequoia was early into Jensen Huang's vision for AI. You're now thinking about not just sort of moving away from LLMs, we're going into application layers, and we're also going into physical AI. I know that that's really important to you at the moment, the application of robotics. Where is the next growth story in this long-term megatrend?
Well, I think let's break this up. I think there's still lots to do in the foundation layer model. They're not done. These companies like OpenAI that we backed early on, they're still continuing to build the foundation model layer. That allows the application founders to build applications that we have not seen before, and we will continue to see innovation there.
Will you continue to see private rounds for those sorts of companies? Is there ever a point at which they've just raised too much money in the private markets?
It goes up and down, but the point is that over time, these companies are always surprising us in the long run on what they're capable of doing. Sure, in the short term, they may surprise us technology tends to surprise us in the opposite direction, but in the long run, it always surprises us in the positive direction. And in terms of many of the companies we work with, they're just providing automation to a lot of workflows today. That's what we see today. So companies that we work with, such as Clay, they're trying to help salespeople with their leads and automatically enriching their leads so that the salespeople can focus on actually growing their business and contacting the right leads. And with Chimera, their ambient scribe is helping doctors focus on care, not the administrative work. They listen in the background, take notes, And yes, they take the notes. It seems like something small, but then once you take the notes, they can code the medical codes properly for insurance claims. And that just allows the doctor to focus on care. And we're going to see more and more innovation because we are left to do some of the more interesting things that humans do better than machines.
So you're looking at still LLMs, still then looking at the application layer. What's been interesting is we have had this FOMO feel in the latest alumni from OpenAI going up and starting their own company. Ilya, for example, potentially raising at $30 billion without even really a product out there or any revenue stream. Would you still back him at that sort of valuation? Are you doing follow-on investment?
I think the interesting thing is if you think that something could be worth $1 trillion, whether it's the entry price today is important, but not as relevant as what you think the order of magnitude is in the future. And I think the order of magnitude that we think about today will surprise us in the long run. And don't forget, a decade ago, 2 decades ago, we didn't think $1 trillion company is possible. If you compound $1 trillion 20% year over year for the next decade, we will have 10, $20 trillion companies. So, you just have to think about the order of magnitude that is possible, and we need to change our mind space around that.
Help change our mind space, because you have been seeing around these corners longer than nearly anyone. How can you see that Ilya is someone to back? How can you see that a founder isn't an individual you want to see the vision of and think that they're going to build $1 trillion company?
Yeah, I think that it comes down to the founders, and we've been very good at picking founders that are known by their first names. Jensen at NVIDIA, Steve at Apple, Larry at Google.
Sam at OpenAI.
Sam at OpenAI. And today's founders are Ilya and Brian at Airbnb and Tony at DoorDash, and the list goes on and on. So these founders are special because they have a vision of the world that the world has viewed the world the world has solved a problem incorrectly, and they want to go change it.
Yeah.
And we get the front row seat to see how they want to go change the future.
Is Mira going to be a name that we know and one that you're going to back?
You already know.
Are you backing her?
We're talking to her.
You're talking to Mira. You're talking to Ilya on his latest funding round?
We're already investors in Ilya's company.
And you'll do follow on because he's building something of big vision.
We'll consider that too.
Tell us about the thesis when it comes to LLMs and then application layers and then the robotics and physical AI. What for you is going to be pushing us forward in terms of the next iteration of value coming from these companies? Are we getting to the stage that we'll see $1 trillion across all of those spaces, do you think?
I believe that's to be true. And if you sort of go back in time, when I started my career, we thought that all the value would accrue to the software layer. That's why we invest in software companies.
Yeah.
But with today, the Magnificent Seven, all of them are both hardware and software companies, and some of them in the physical world. I think the physical world is going to be the next boundary that we're going to break, which is why I'm very excited to be here with Brad Porter from Collaborative Robotics.
And it's interesting, of course, you've backed XAI when it comes to AI. Elon himself busy looking at robotics from his Tesla perspective as well. How are you thinking about who wins in the robotics space, or are there going to be countless winners and applications?
As you know, that there are many, many winners when there's a megatrend, and so I believe there are going to be many winners in robotics. And yes, Tesla is building robots. They were building cars before. They also build software. And Elon is someone that we back across a variety of companies, such as SpaceX and Boring Company. And the physical world is something that we will continue to attack and make progress over the coming years.
How frustrating or how illuminating is it when your founders are having arguments in public, like Sam versus Elon? Does that bother you?
You can ask them those questions, but founders have a particular view of the world, and they like to express those views. So it's good that people sort of talk about what they believe and how they're going to sort of change the world through that. And I believe that discussion is always a positive thing.
Who and where are they going to be from is changing the world at this moment when you think about China versus the US? DeepSeek, you wrote a very thoughtful blog about the impact of DeepSeek and the opportunities for learning from these powerful generative AI models that are going to come, and the innovation and the data and the efficiencies we're going to see. Are we going to see so-called winners on either side and around the world?
Well, I believe in humanity instead of one country over the other. I'm an immigrant to this country, and I believe that the way we operate and build businesses here is much more innovative. And so I'm rooting for the United States, but even more than that, I'm rooting for humanity to continue to progress. And the more progress we make here, the more progress that people in China want to make. And the more progress they make there, the more we want to continue to make progress. And so that just is the thing that I'm most focused on, which is we're going to just make each other better. Competition has always made us better. And I believe in the United States and its ability in its free society to do things in much more innovative ways than almost any other country in the world. It's our innovation, it's our free spirit, and it's also our capital markets. If you think about our place in the world, we have approximately 4% of the world's population, but we have a disproportionate number of the amazing companies, the most valuable companies in the world. We have a disproportionate amount of capital that we have and control and are able to invest. This is why your viewers listen to you and this show, because Bloomberg is the place where a lot of information about capital is talked about.
Alfred, thanks. But they're listening to you, and they're listening to thinking about how the money comes back ultimately to your LPs, and it's going to be about exits. How are you thinking about the IPO market? How are you thinking about M&A? Boy, we just had ServiceNow and MoveWorks. M&A is still getting done.
Yeah, so I think that's a great question. Lots of people ask that, but I just want to sort of emphasize that at Sequoia, over the last 5 years, we've distributed over $43 billion back to our LPs. And so this is a business that, if done right, can generate a lot of returns for our limited partners. On top of that, I just kind of tell our founders, it doesn't matter what's going on in the public markets or in the M&A markets. Just focus on building a long-term great business. If you do that, as did Tony at DoorDash and Brian at Airbnb and many others are doing today, you will always have options. And that option may come in at M&A, that option may come in IPO. I would contend that the IPO market is always open for great companies.
What's interesting is we first saw AI come into existence almost in a not-for-profit mentality. And now we think OpenAI thinking about trying to restructure and become a for-profit entity more clearly. Is that something that you back, that you support, that you want to see clearer division of for-profit and not?
If you go back in history, AI has existed for way longer than what you're talking about, which is OpenAI. I mean, Jensen was building GPUs way longer than what we're talking about today. And the first set of applications that were AI applications were something like AdWords that Google built, or trading platforms that many of your viewers and that work at large institutions have been using. Those were called machine learning. We just changed that term. For-profit, non-profit, those are just structures for accomplishing what the mission of the company wants to do. And I'm supportive of whatever the right model is to do that. But as an investor, I want to make sure that the equity that we invest in has appreciation, and that's separate from the mission.
Well, you have an extraordinary realm of portfolio companies. You sit on some amazing boards, Citadel Securities among them, as well as Airbnb, as you say, and you've had a long history of being a founder and a builder yourself. Alfred Lin, we thank him so much from Sequoia Capital. We will now want to return to the public markets. Bonnie, get us up to speed.
Well, we saw some dip buying early this morning, Caroline, but that changed pretty quick smart after Donald Trump said in a Truth Social post that he would be doubling the already planned 25% tariffs on Canadian imports of aluminum and steel from midnight tonight. That was a shock to the markets, and you saw the VIX spike up to past 29. Remember yesterday when it moved past 27, that was a major deal. Well, it was over 29. Now we are seeing some recovery. So right now we have more than 400 stocks lower in the S&P 500, about 100 stocks still higher. But the S&P itself, even though it's recovering just a little bit, still down about 9% since its high in February. The Nasdaq 100 now down nearly 12% from its peak less than a month ago. Remember, in Canada, there is a new incoming Prime Minister as well, right? In the next few days, Mark Carney is going to be sworn in as leader of the Liberal Party to replace Justin Trudeau. So there's a lot to be said on the part of the leaders in Canada in the next few days. The Canadian dollar is weaker versus the US dollar today too by about 0.5%, trading now at 145.12. All this, of course, on the idea that Trump is upping the ante on tariffs. We knew that 25% tariffs were coming in already at midnight. That is now 50% tariffs. You're seeing the steel and aluminum producers jump on the news. So the likes of Century Aluminum, Nucor, Alcoa, they are all higher. But those other tariffs that were due to come into place in April, they're still going ahead. And Trump said he would substantially increase some of those on Canadian auto parts, if Canada doesn't drop certain levies on dairy products and other US goods. So there's a lot more to come before this story is over, Caroline.
But we're just... Bonnie, so appreciate you getting us up to speed on what is an underlying level of anxiety in these public markets. We want to return now, though, to the private markets and people building within that space. May Habib is a key founder, CEO, and indeed the co-founder of Writer, a generative AI platform for the enterprise. And I've got to ask at this time, May, when you're really seeing the growth accelerate for your business, when you're seeing more and more Fortune 500 businesses want to work with you, what are these CEOs telling you about the landscape, about anxiety about putting money into generative AI when they don't know when the next tariff is hitting?
Yeah, there's no question that selling generative AI in the enterprise right now has to be an ROI first story, because these are the same CEOs who are telling the street that they're cutting OPEX and, they're trimming down their teams. So it really puts a big focus on the kind of return. And the reality is, Satya said it a couple weekends ago, right? There's never been such a big gulf between what technology can do and then what's actually happening inside of the enterprise. We've got a survey coming out, Fortune 500 execs, 71% are saying that their generative AI efforts have been very disappointing. And so, it absolutely is a big...
Why is it very disappointing? Why is it so hard to bring this once-in-a-lifetime AI exuberance to bear on your productivity?
I think we are bringing knives to a gunfight when it comes to actually building with generative AI. People are taking these really long kind of software development cycles, and IT is taking these projects to the business, and the business is saying, this is not really good enough to actually benefit my work. So we take a very different approach. Writer is purpose built for that kind of collaboration you need between the business and IT to actually deliver generative AI projects and applications and agents that work for the business.
So is it sort of legacy software is the issue here?
So it's the legacy tooling of building these products, and so the LLMs are very, very powerful, but you need to wrap it with data, with workflow, with know-how, and that's just not happening right now in most IT departments in the enterprise.
So help measure your success. How are you articulating to those you're going out and pitching and saying you will get ROI with us?
It's a very solution-oriented approach. So, we're not talking about, hey, buy a full stack platform, buy our amazing LLMs, look at us, how great we are. We're talking about actual end user productivity and end user use cases. So it's very solution-oriented.
What's also interesting is you've set yourself apart from a pretty crowded field, I'm going to say, like agentic AI and generative AI in the workplace and enterprise seems to be everyone's lexicon right now. But you're coming at it from, look, we do something very different with the type of data we're using and the type of model building that we're going through. You're almost saying, like, actually, don't look at a reasoning model, look at our type of model. What is your type of model?
Yeah, I mean, look at this exhibition floor. It's literally hundreds and hundreds of startups, and it's such an exciting opportunity. But when it comes to the enterprise, they are looking at the vendors that they trust, the ones that already have their data. But yesterday I was with a CIO of a Fortune 500 company where to hire an employee, they need to touch 100 systems. Only 10, 15 of them might be a ServiceNow application, right? So we kind of see ourselves as that Switzerland that ties together a lot of disparate systems when it comes to building these agentic applications. And it really is that bringing together structured and unstructured data together to build the tooling.
But when we had Jensen Huang come out with his latest earnings, he tried to paint the vision of a new scaling law that's here because of reasoning models. But you're actually taking issue with reasoning models in the generative AI application right now. You think that self-evolving models is where we should go. Can you articulate what that is?
Yeah, I mean, I love Jensen, and he just wants more tokens, right? And he's absolutely right in the spirit of what he's saying, which is the revolution is just getting started, right? The vast majority of enterprises are still not benefiting from AI. So imagine what's going to happen once they do, right? When it comes to the actual LLMs, right, what we're saying is the path to superintelligence is through self-evolving models that can update their training data in real time in response to making a mistake and then getting nudged by a user, you didn't get our process right? If we need to go out and retrain or fine-tune or, rebuild a RAG pipeline every time a model is wrong, we are never going to get to the kind of superintelligence that's possible.
What about the talent that's needed? At the moment, we've got a new administration that seems to be cutting funding for science in the United States, for universities and next level education. Is that something that worries you, or is talent still rich for you?
I mean, talent is a struggle no matter, what the political environment. We just opened up our London and Singapore offices for exactly this reason, to be able to hire outside of the United States. Most of our 400 employees are here, but as we look to double over the next year, we are definitely going to be growing internationally.
What about inorganic versus organic? Every time you come on, I say, who other startups are you looking at? What other acqui-hires can you do? Is it still rich pickings for you to buy other businesses?
There are literally hundreds of startups that are doing really, really exciting things that are finding it difficult to sell into the enterprise. We have kind of risen above the noise, and so there have been, some really interesting things that we're looking at as bolt-on acquisitions to the Writer platform.
Come on, when you can announce some of them. May Habib, it's always great to catch up with her, the CEO of Writer. Now let's return to where we're going next. Much more to expect from HumanX conference, but in the interim, looks what happened to Oracle shares after they had their numbers after the bell yesterday. There was disappointment. That 8% revenue growth that was hoped for was not quite matched. We're off by 5%. They did say, look, next fiscal year, the year after that, we're going to see 15%, 20% revenue growth. But in the here and now, they disappoint in terms of cloud infrastructure demand and sales return. From Las Vegas, this is Bloomberg Technology. Welcome back to a special edition of Bloomberg Technology. I'm Caroline Hyde in Las Vegas. We're live at the HumanX AI conference, and we are keeping abreast of what's happening in public markets, because after the biggest sell-off for the Nasdaq 100 yesterday since 2022, we want to see what the Magnificent Seven is up to. We're currently bouncing around, up now 0.4%, but this is not the sort of bounce back that we anticipated after the hard sell-off of yesterday. Their anxiety is still there when it comes to U.S. growth, tariff pressure, and the latest that are being imposed, of course, on Canadian goods. Let's talk about what it means for the private sector vibes. And Rachel Metz is here in Las Vegas. Look, this is one of the biggest artificial intelligence gatherings. Are they feeling exuberant? Are they worried about what's happening in the public markets and the sell-off that we've seen in the likes of Nvidia, down $1 trillion from its highs of market cap?
I think it's a little bit of both things, right? I think people are a little concerned about what's going on with the stock market. But frankly, during the time that I've been here, I see a lot of people excited about AI. I mean, this is a conference that has not happened before, so people are excited to be here to see what's going to happen here. And a lot of people probably haven't been together, in this space, and there are so many people. The vibes are, I'd say, pretty good at this moment.
Because the moon music had been still one of FOMO. We're just talking with Alfred about how he's still speaking with Ilya, who's potentially raising at $30 billion. The ex-OpenAI alumni who are coming out, Mirati's raising money. We're expecting just these bigger and bigger valuations. With fewer and fewer products actually being offered, people are getting in at such an early stage. Is that going to stay with these public market gyrations?
That is a really good question. I think it's a little bit hard to say, but it certainly is still the case that you only have, I think, a handful of people that are able to command these kinds of valuations, these amounts of money, without even saying, look, here's my minimum viable product. Like Ilya's company in particular, they have said specifically, like, we're not going to show anything, we're not going to roll anything out until we get to this extremely high level of a product. So I think you're not going to have a ton of people like that, but you're right that people are asking questions about, just in general, like, how much money should we put toward these things, especially if it's not something we've even gotten a hint of what it's going to be yet.
You're speaking with international CEOs as well and leaders of AI businesses. How are they viewing the US as a place to be building right now versus France and Mistral, or what's happening in the Middle East or in Asia?
Yeah, I mean, I think people are feeling like it's not totally clear yet how things are going to shake out. I think there's probably a little bit of hesitation, but also I'm not sure that anybody is really saying like, oh, I'm not going to do that right now.
And we're not worried about scaling laws?
I mean, I think people should certainly be thinking about it. And for a variety of reasons. It's getting more and more and more expensive to build larger AI models. That also uses more and more resources. So I think you see people thinking about, well, how else might we be able to build these things and make them both powerful and cost effective and also decent for the environment.
Rachel Metz is going on stage very soon. We thank her for joining us. Live from Las Vegas, this is Bloomberg Technology. Welcome back to the special edition of Bloomberg Technology. We are live from the HumanX AI conference in Las Vegas. Just bear with us as we have some technicians playing with the sound system behind us, but we get straight to these markets because we are bouncing around. The volatility is real today. Nvidia, after a hard sell-off yesterday, is bouncing up 1.8%, but it has been in the red today as we try to digest the latest wave of tariffs of an electricity state of emergency here in the United States being declared by President Trump. Meanwhile, President Trump also says he's going to be buying a Tesla. Tesla up 2.9%, let's call it, after a 15% sell-off yesterday around the anxiety of sales and the future. UBS analysts calling that one out. Apple down 2.8%, even as they unveil, well, as Mark Gurman unveils that they're going to be bringing us a whole updated operating system across Macs, iPads, and indeed iPhones come WWDC in June. Not enough to settle some of those worries about the Siri implementation with AI, and indeed, what's happening with the Google DOJ investigation as well. Yesterday, it seems as though the current DOJ in this current administration still looking at stopping any flows of money going from Google to Apple. But let's dig into just where the mindset is right now. How are CEOs feeling? How are HR departments feeling? How's the labor force? Sarah Franklin is the person to talk about it. Lattice CEO, where it's bringing artificial intelligence within the HR spectrum and ultimately helping companies navigate progress within their business, culture within their business. But right now, I have a feeling maybe the AI output is have fewer people.
I mean, Caroline, we are in a new economy. It has transformed from a data economy to an AI economy overnight. And you're seeing the questions of like, what does this mean for my jobs? What does this mean for my people? What does it mean for my business? And everything you were just talking about as well, how it's impacting public policy, tariffs, everything with electricity to fuel the economy. The AI economy is real, and it's very much about jobs. And at Lattice, we want to put people at the center and the success of people at the center so that AI can be helpful for a people-powered future.
And what are you seeing then? You are one of those people and voices who, against the grain, came out and said we are going to have new co-workers, and they're going to be artificial intelligence. What does that mean for disruption of the labor force? What does it mean for the ultimate labor force data we get week in, week out, which currently is starting to see a little bit of a bump up in unemployment?
Yeah, I mean, Caroline, in July, we had this vision. We saw what was coming with AI, and we wanted to get ahead of it because we believe that we need to put the success of people as a primary. How do we help people understand how to work together with AI, where they are your coworker? And how do you manage AI when it's not just about automation, it's about autonomy? People need to understand that AI will be acting on your behalf, on your brand's behalf, on your business behalf. And so we are ahead of this, and we're helping HR leaders be the people that are helping their companies bring AI in responsibly so that we can make sure that every career, every job that's changing, we can put AI into it in a way that helps people be successful in the future.
May Habib of Writer was just on saying they've got a survey coming out showing that at the moment CEOs are really disappointed with generative AI, with the productivity lack of gains. How are you measuring success? How are you starting to show up that it's helping in the world of HR?
Yeah, so this is a thing. This is new. This is an unwritten book for us, and people don't know what to do. People are saying, okay, let me just bring in AI, but then you have blank slate problems, or you don't really know how to use it. So we need to invest in the education. We need to invest in the career pathways. We need to invest in how people can be successful.
Are CEOs willing to do that in this anxiety-ridden market where they're just trying to think about the bottom line? They're willing to invest in their people?
CEOs are, and this is where HR leaders have an opportunity to be that rock for them to lean on, and for them to really go forward and know what to do to invest in their people and their performance, because the ultimate judge is how performant is your company. And performant companies are that way when their people are performant, they're engaged, they're passionate, and they know what to do, and they know how to use the tools. You can't just throw AI at them. You have to say, this is how you're going to use it. And we want to do this in a way that puts the people's success as the primary.
Look, I'm going to ask a kind of uncomfortable question with two women sitting here at an AI conference and thinking about who generally is in HR departments. But how are women adopting it, in particular, generative AI versus men? How is it disrupting women more in the workplace than men? Or is that just a too basic, simplistic idea?
The truth is, we're too early to tell. Like, this is all new. What I do love is that is two incredible women here.
Stop it.
Big fan. Is that women have that curiosity, they have the resilience, they have the ability to adapt to change, and they say, okay, this is new, let's bring this in and figure out how it can help me, and my team. And having that mindset of how we can use this technology to be helpful is the mindset. We don't want to just automate people out of work. We want to bring people into the future that we're creating. And this is a massive responsibility that we all share, because we can't just create technology for technology's sake. We have to create it for the better of the world, and for the better of business, and for the better of people.
But will people be automated out of work?
Jobs are going to change. It is no question. There is a massive reshaping that every CEO, what is on their mind is, how do I reshape my business? How do I reshape these career pathways? How do I put this in there? And there's so many questions we don't have the answers to. That's why we need courage in the leadership, and we need to be responsible, accountable, and transparent in the decisions that we're making. And that's what Lattice helps all HR leaders do as they're bringing AI into the workforce.
What about your own talent and bringing on people into your own business at the moment? Is it rich pickings as people reorientate their own businesses? You came from Salesforce, and they're busy trying to get rid of some talent to bring in more AI talent. Is it fierce to get hold of the people you need?
We are hiring at Lattice, and we have a great talent pool that's coming in, and we invest in our people. And this is something which I'm proud of as a CEO, that I know that my company trusts me, and I know that they know that I will be transparent and accountable to the decisions that we make. And yes, investing in the people. We need to also, as leaders, invest in ourselves. Like, we are not immune to this. I mean, who's to say that we'll have AI salespeople or AI CEOs? Who knows what the future will be? But we all have to embrace this change, and we all have to embrace AI in a way that it is just a reality. It is in the workforce, and the question is, how do we make people the primary benefactor?
What about globally speaking? Is there as much adoption and willingness to bring it into the HR space in Europe, in Asia, as there in the United States?
You know, again, it's early days. What I see is, from my vantage point as a tech CEO, is that the globalization that AI provides us, it really helps us to battle the misunderstanding that we have when language is a barrier, when culture is a barrier. And that's something that I personally am optimistic about, is if we can use this technology in a way to help us collaborate better, remove misunderstanding, understand nuance better. And that's something I'm hopeful that bringing AI into the workforce, it can help us have better understanding.
You've been ranked as one of the fastest growing companies, private companies out there. What is holding back growth at the moment? If you could ask anything of the administration, of the markets, of the environment, what would it be?
Uncertainty. We are in a very uncertain time right now. And so the way that we get everyone together and go to growth is by being very certain in our pathway, and just calming the fears that we're going to eliminate people from all jobs. Say, we are committed to a people-powered future, and we're committed to building your success. Yes, it's a change. It's happening fast. We can't be living in that movie, Don't Look Up, you know? Yep. We have to know that this is going to happen, embrace it, and have the courage and the support of each other to together go into this future and be responsible, accountable, and transparent, because trust is really the currency of the AI economy.
Sarah, it's great to catch up with you here.
Great to be
Have
here.
a wonderful time at HumanX. Sarah Franklin, Lattice CEO. Let's get back to some of the anxiety in the public markets now. Vonnie, standing by.
Caroline, we're off our lows, but that dip buying that we saw at the beginning of the session today for what was looking to be a better session after that awful sell-off yesterday had a bit of a pit stop. This after President Trump tweeted on Truth Social that he was going to double tariffs on steel and aluminum imports from Canada from midnight tonight, and that's double the 25% that were already due to come into effect. This, of course, in response to Ontario's move to place a levy on electricity sent to certain states in the United States. Now, we know that Canada tends to match US tariffs, so anxiety spread across the market. We saw the VIX index above 29, slightly calmer now, but it is still above 28. It reached just 28 yesterday, and so you can see this two-day move in the VIX has seen some very definite spikes, and the market isn't quite sure who to believe or what comment to wait for next. We're obviously waiting for a response from Canada, but we have the current Prime Minister Justin Trudeau, who will be handing off to his successor Mark Carney, who's due to be sworn in as leader of the Liberal Party and therefore Prime Minister in the next few days, waiting on a response from those. But in the meantime, we're seeing the Canadian dollar weaken, although again it's off its lows. It's trading below 145 now. And we're also seeing shares of steel and aluminum companies higher along with some of the market today. Century Aluminum, for example, as you can see, up more than 9%. And you've also got Alcoa, Nucor and US Steel rallying off the back of this idea that the US will literally import any Canadian steel at a cost of more than 50% higher than it would literally today. We have car makers down as well. The other story of volatility that I want to point out today too, Caroline, is the crypto story. We had crypto trading at $76,000 a coin briefly earlier. We're now back well above $81,000 a coin, and that is helping crypto-related stocks.
Bonnie, we thank you. And just as we come back to HumanX here in Las Vegas, the music is pumping because we've got a mixture of euphoria around artificial intelligence. We've also got a healthy dose of anxiety around these public markets. Andrew Feldman joins us now, Cerebras CEO, who is in the market of updating ultimately access to compute with a whole new way of thinking about bringing the data center to life. Andrew, I asked you in this time where we're worried about an electricity state of emergency. You need power for your data centers. I know you've got efficient data centers, a whole new way of powering that means less power is necessary than the usual architecture and GPUs. But does that worry you, an electricity state of emergency?
Look, I think as a nation we've underinvested in our infrastructure, including electricity infrastructure. And AI uses a fair bit of power. Yeah. And even companies like Cerebras, who have the most efficient compute, in the market, we use a fair bit of power. And so it's not unreasonable that the administration recognizes that power is fundamental, AI is fundamental, and that they have taken some steps to, I think, to eliminate some of the red tape. It takes a long time to bring up new power plants and to deliver those to new data centers.
Has it been holding your growth back? I know you've just been deploying in places like Oklahoma City and Montreal, but has the power infrastructure been an issue?
Absolutely. Where these facilities are and how limited and how scarce they are is limiting everybody in the industry right now. These are hard to find, they're expensive, they're driving up the cost of AI. About half of the cost of AI is attributed straight to power. And so I think if we can do a better job at the infrastructure level, then as we provide more compute, right, across the country, we will benefit from AI as its price drops.
Well, let's just remind people of your CS3 system. Ultimately, this is a way of bringing compute in a different way with a much smaller surface area, ultimately, than your usual tech stack and a usual set of GPUs. How is that selling into this narrative? How are you able to distinguish yourselves? Because you need less power, because you need less space as well within a data center.
That's right. So we chose a very different strategy. We chose to build the world's largest chip, a chip 56 times larger than any previous chip. That meant we had to move less information, and that allowed us to use less energy. And we are awash in demand. And yeah, we're buried in demand right now.
Where from?
Well, we just announced large customers like Hugging Face, like AlphaSense, like Perplexity, like Mistral. Remember, AI is made with training and used in inference, and right now everybody wants to use it. And so there's tremendous demand for blazing fast, low-power inference, and that's what we're bringing to market right now.
Mistral, a global player over in France. You have had a lot of exposure to a Middle Eastern player, G42. How are you changing that exposure? Because there have been some anxiety you were too dependent on them as a customer.
Well, I think the way you catch three very large customers is to begin with one very large customer. And we began with a strategic partnership with G42, and that's been an extraordinary partnership. And they've been everything we could have hoped for in a partnership. We began deploying with them in the U.S., and through this deployment, we proved to the world that we could build some of the largest data centers, train some of the largest models, and deliver some of the fastest inference in the world. And that's opened the door for others. And now we're in conversations with the largest players in the world. They were a door opener for us and have been an excellent partner.
Is that door wide open when you've got such rules as the AI diffusion rule, which potentially limits you selling into allies as well as so-called adversary countries?
Look, we've been a big proponent and work closely with commerce. That's a confusing rule, to be honest.
Yeah.
And it's if I understand correctly, it's not quite a rule yet. It's a recommendation to be a rule, and it will come in June, I think, as a rule. I think there are other ways that we could have achieved the same goals, but we support what Department of Commerce says, and if that's the path, then that's the playbook we use.
Do you think it will be, or do you think that they'll navigate away?
My view is I think we can achieve the same objectives with a slightly less intrusive approach, and I hope they navigate away. But we weren't, as Cerebras, selling to China long before the rules said we couldn't.
Yeah.
We thought that was the right thing to do, and so we chose to follow our ethics. So we will do whatever's right.
How will you do whatever's right within these public markets? You, of course, are eyeing an IPO. Is now the right time?
I think there's a lot of things when you go public you can't control. Right? You can't control what the president says. You can't control sentiment. What you can control is how you run your company every day. You can build extraordinary technology. You can treat your people well so they want to stay. You can hire some of the best people from around the world. You can deliver and keep your customers extremely happy. These are things we can control. And whether you go out in a month or a year, those are things I think that fall into place if you build an extraordinary business. And that's what we can focus on.
You can't control others' innovation.
We can.
And I'm interested in the innovation that DeepSeek brought and the idea that maybe we'll have more and more powerful models with less and less in compute need. Are we ultimately just going to scale the applications?
I think that wasn't exactly what DeepSeek showed. I think what DeepSeek showed was that several hundred people and a fair bit of compute, maybe less than others had used, but a lot of compute could produce a very interesting result in the open source community. So building on the work of others, right? Work could be moved forward, innovations added. And I think that the public markets have almost always taken the wrong first step when the cost of compute comes down, right? When the cost of compute comes down, our market grows. And it's done that every single time for the last 50 or 60 years. And every single time the public markets have thought, oh, the market's getting smaller. But that's not actually what happens. When the cost of compute, when we can do more for less, new applications burgeon. And this is making the market bigger, not smaller.
And you'll be there with the offering of inference and compute.
We will.
Andrew Feldman, Cerebras CEO. Delight to have him here. Thank you. Now coming up, so much more. Poolside CEO going to be discussing the future of his business as he focuses in on coding with generative AI. Jason Warner joins us. Now we return to what's happening in the NASDAQ and the stocks right now. As we know, tumult has been upon the tech sector. We're now up about 0.1% on the NASDAQ 100 after its worst day since 2022. Yesterday, we lost almost 4%. We wiped out $1 trillion worth of market cap. We see a slight recovery, but still worries there. The semiconductor index down 0.6%. This is Bloomberg Technology. Welcome back to this special edition of Bloomberg Technology. I'm Caroline Hyde in Las Vegas. We are live at the HumanX AI conference. And there is a tone of anxiety in the public markets that maybe plays into the private sector a little bit. When you look at a Magnificent Seven actually managing to be now up a percentage point, having been in the red in earlier trade, we try to understand what the impact of an energy state of crisis is for the United States, state of emergency, how that implicates data center demand. We try to understand what the latest tariffs on aluminium, on metals coming from Canada means for broader risk sentiment. But for now, some reprieve after a harsh sell-off yesterday as people sold their winners, and those winners are 2023 and 2024 with the Magnificent Seven names. But we want to think about the impact on the private stage and indeed what's happening in terms of innovation. It's not stopping, it's not cooling down. Jason Warner is here, Poolside CEO, of course, previously CTO of GitHub, which is now so embodied within the area of helping coders, helping engineers. You are building basically super intelligence for engineers going forward. How are you doing that?
Well, first, great to be here. Thanks for having me. And yes, we're building towards a human intelligence future where artificial intelligence and humans live side by side, but artificial intelligence can do most of the things that humans can do. The way in which we do that is we have some proprietary research techniques. We have dubbed them reinforcement learning via code execution feedback. But for the layperson, what they need to understand is we're just going to give them the superpower to write software in the future. And anyone who currently knows, it'll feel like being augmented by 100x.
Will that displace the number of engineers we need, or ultimately free them up to do more? How are you thinking about augmenting versus replacing?
Yeah, I mean, I think the conversation of replacement is always one that pops up, but I tend to look at these things about what we're going to be able to do more of, what we'll be able to do faster. And this is where I get excited, because I think about what software does currently. In 2025, it underwrites almost the entire economy that we have. But if you think about what it can do in the future, is it can take something that might be 5 or 6 people months of 10 humans to do this, and it can reduce that to compute hours. And that's great for someone like the biologist or the physicist or the person doing cancer research. And this is the thing I think about, compressing human knowledge learning into compute hours.
You're not the only CEO we've recently spoken to who's thinking about giving super intelligence and superpowers to an engineer. And look, we just had Reflection AI on the show yesterday. How is the space? How is there an awful lot of startups trying to do the same thing or different things? Distinguish yourselves from the competition.
They're all slightly different. The idea here with Poolside is more akin to OpenAI and Anthropic in that we are going after the thing that we might call AGI and eventually ASI. And so what we are at our heart is a frontier AI company similar to OpenAI and Anthropic. And we are pushing the boundaries on that. We're going via software for technical reasons. We don't need to get into that, but it's very technical reasons. And then many other folks end up in what I would call the AI consumer camp. There will be 5 or 6 very large winners who build out the core infrastructure of artificial intelligence, and the rest of the folks will consume the artificial intelligence produced by those companies.
So you see yourself as an infrastructure player?
Well, I see myself just right next to OpenAI and Anthropic.
Okay. Do you see yourself as a valuation perspective right next to them? Because tell us about where you are and your funding needs and whether you're out there raising money to do this.
Well, building artificial intelligence models is a capital-intensive game. So at some point we always have to consider how much compute capacity we have. And that is a proxy for how fast you can go or how big you can go. So that's always going to be a topic, but right now we're really happy with where we sit.
So you're not raising money?
We're not raising money right now.
What about compute, and what is holding you back right now? Is it energy infrastructure? Is it electricity? Is it access to data centers? What is it?
I would love more time.
Yeah.
I would love more time for us to go do more experiments. But for the thing that I think about holding us back is really where we are in the world. If I can net this out into a different way, which is if we were in a world of infinite access to energy, infinite access to compute, and infinite access to data, we would be at AGI or ASI already.
Already.
But we don't have an infinite world. We have a constrained world, so we must make different choices. So my main choice that I have to make is how I spend my compute budget. So if you were to ask, my primary concern is always access to more compute.
At the moment, where do you get your compute from?
We have partnerships across a wide variety of folks, although our primary cluster is with Amazon, AWS Web Services.
And is that largely US placed? What's interesting about you is perhaps people got you modeled up with a French company at one point. I know that you had team members there. Are you US domiciled? Where are you thinking about your future?
We are and always have been a US company, though we have a presence in France. We have primarily hired our AI researchers across Europe and in the UK. And so we have an office in Paris, which the entire team happens to be right now because they're doing an on-site, which we do once a month. But we're a US company.
US company and wishing for more compute alongside a lot of other US companies. Jason Warner, it's been great to have him, the Poolside CEO, keep a track of that company in the private sector. Meanwhile, back in the public sector, we are looking at shares, the NASDAQ stocks that are in the chip sector, Nvidia as well, a very volatile day. We're currently up 0.25% on the NASDAQ 100 after a brutal sell-off yesterday, the worst that we've seen since 2022. The semiconductor index is still underwater by some 0.4%. Remember, Oracle numbers as well, perhaps giving a bit of a dampening spirit to ultimately the demand for AI and how quickly we can get data centers on track. Interestingly, they're still pointing towards 15 to 20% revenue growth for the next fiscal years, so pointing that really the demand still remains insatiable when it comes to infrastructure. But thus far, it didn't live up to expectations. Nvidia, though, rebounding 2.6% after it's lost more than $1 trillion from its market cap in the last couple of months.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome to a special edition of Bloomberg Technology. We are live from the HumanX AI conference right here in Las Vegas, where we're talking to the biggest AI industry leaders, thought leaders, builders of companies, decision makers. We've got plenty to come in the private sector, but we've got to be articulating what's happening in the public sector right now. Another key set of anxiety building around the latest set of tariffs and concerns around energy. Vonnie Quinn in New York has the latest on the public markets.
Well, Caroline, this market has been doing a three-point turn several times today. We're again turning lower now. The S&P 500 down about 0.8%, and you can see that chart and just the upheaval in the market today, partially thanks to a Truth Social post on the part of the president, who said that he's going to double the already 25% tariffs that were due to go on steel and aluminum imports from Canada tonight at midnight. That's now going to be 50%, according to the president, as of this moment. At that point, we saw the VIX spike above 29, which is the highest it's been since well before December. In fact, it only spiked past 25 in December. So the last 2 days, as you can see, the VIX has been just inching ever higher. It topped 27 a couple of times yesterday, topped 29 today. But as you can see, we're back below 28 again now. So we're sort of in the middle of the panic, if you like. We had seen a high end to the panic straight after that tweet. But we do have a good 130 or so stocks still higher now in the S&P 500, about 392 lower in the S&P 500. That, of course, about 9% off its highs, that index. And the NASDAQ, well, it's been in a correction, and today is doing nothing to help that get out of the correction, down about 12% since its high less than a month ago. We are seeing Bitcoin rally just a little bit off its lows. It hit 76 and change earlier on today, and those stocks are helping the market ever higher as well. But if we take a look at the aluminum stocks and the steel stocks, the producing stocks, you can see a massive rally for the likes of Century there. We're also seeing a rally for Alcoa and some of the others. That's as we await a response from Canada. And bear in mind, we have Justin Trudeau handing off literally this week to Mark Carney as Prime Minister. So we'll see what happens if indeed those tariffs do go on tonight at midnight, 50% on steel aluminum, as President Trump has promised.
His economic expertise going to be key at this moment. Thank you, Vonnie. Look, we've got to think about what the public markets mean for the private markets, but also take a longer-term perspective here with a man who put the first check in, basically, from the venture community into OpenAI and has a long history with, therefore, how we move from LLM to application layer. Vinod Khosla, founder of Khosla Ventures, the person to talk to about artificial intelligence, about the broader economy. Vinod, you're here at HumanX because we've all been so focused on large language models, you among them with OpenAI, but now we're at the application stage, and you're thinking about how it affects us as humans, our health, our mental wellness. You're going to be on stage with Limbic, for example, a portfolio company.
Yes, I'm very excited about the role AI can play in healthcare. And in fact, I first wrote about it in 2012, about how the AI can do the role of doctors and therapists and teachers and other roles. So I'm very excited to see it all coming through, probably faster than I had anticipated.
You have been a long time thinking about the implications for healthcare. You also said that energy is going to be a key beneficiary from generative AI. Look, we have a state of emergency in America around electricity and energy. What does this mean for AI, and how can AI help solve it?
I think it's a solvable problem. It's not an easy problem, but in fact, at the same time we invested in OpenAI in roughly 2018, when we made the decision to invest, we also invested in Commonwealth Fusion. And nobody around the planet believed fusion was near term. I think energy will be a solved problem by 2030, and AI will be a solved problem. There's Commonwealth Fusion, of course, which will, I suspect, go on to retrofit every coal and natural gas plant in the world with fusion boilers. So we don't have to build whole new power plants. That's one. But the sleeper is also super hot geothermal. Geothermal's mostly been ignored because it's 0.4% of US energy, largely irrelevant. But I think if the technologies that deliver right, it can also be 20-30% of US energy and global energy quite easily. So energy I'm optimistic about, but AI is very, very exciting, and AI in healthcare even more so.
But is there a limiting factor from an infrastructure perspective on the generative AI innovation we can see in the here and now? Andy Jassy telling us, look, my biggest concern is power in many ways. What is limiting the startups that you back?
Well, today, the big limitation isn't power. The big limitation is, can we get enough chips? And building a semiconductor fab is a 5-year process. So a new TSMC fab will take a long time. Once we have that, we'll have to power it, and we will need the power. You know, planning cycles in power are pretty long. So I do think we need to worry about it, but the world is doing a lot. But in 5 years, could you add gigawatts and gigawatts of geothermal energy? Yes. In the 2030s, can you convert most coal plants to clean power and produce many tens of gigawatts with fusion? I believe that's all possible and doable if we are smart about it. If we retrofit these plants, upgrade these plants, upgrade their capacity.
How confident are you that we're being smart about it?
I think we're being pretty good about it. All that will happen. If we are slower about it, his prices will be higher for AI technologies and other things for power. And the markets will adjust to demand supply. I think power will be priced higher if we can't move fast enough. I do believe a lot of entrepreneurs moving very, very quickly. Now, organizations like yours tend to listen to the experts. The experts are almost always wrong when it matters. They're right when you're extrapolating the past, but entrepreneurs invent the future they want, not just extrapolate the past. And I think that approach is the right approach to these large problems like energy, AI, almost every large area, including healthcare.
You said that, well, when you were writing back in 2012, or when you've been writing thought leadership pieces, 100-page documents about the optimism you have about AI and the applications of it. When you think about the innovation seeing from a large language model perspective, when you get an upending to the public markets like by a DeepSeek, did that to you build into the optimistic nature? Do you like what's happening with innovation at the large language model stage?
I really love the model and the rate of acceleration. So as the naysayers and press loves headlines, clickable headlines, talk about flattening and other things, I haven't seen it. In fact, I suspect we will see more acceleration in the next 2 years of AI capability at the model level, not just the application level, than we saw in the last 2 years. And last 2 years, since December 22, was stunning in terms of acceleration of capability. We'll see even more the next 2 years. So I'm fundamentally optimistic. I think we'll be in the AGI domain in the next couple of years. Whether it's 1, 2, or 3 doesn't really matter.
Will China be in the AGI domain in 1 or 2 years?
I think China's doing a good job, but you mentioned DeepSeek. I like to characterize DeepSeek as a third of the technology was stolen. China is good at that. A third of the technology was clever hacks. And a third of the technology was real innovation. So I give them credit for that, and the rest of the world has learned. But by far the largest contribution that DeepSeek made, and they made a valuable contribution, was convince all kinds of young technologists all over the world to say innovation isn't restricted to just the big model providers with multi-billion-dollar data centers. Anybody can innovate. So this freeing up of people's belief systems of who can innovate is the largest contribution DeepSeek has made, and I'm really glad for that. I think we're in a race with China, but by and large, I think we will see accelerating innovation, not flattening innovation.
Is there a risk that innovation is stymied by a lack of consistency from a regulatory perspective, from a tariff perspective?
I don't care about tariffs. Those are short-term phenomena. I like to say we have to today keep our eyes on 2030. What can we achieve and how much better we can do for humanity by 2030 with all these technologies. Little burps like stock market ups and downs. I know it's your business, but I don't worry about them. I mostly don't look at markets.
But what you look at is OpenAI's innovation, 4.5 innovation that maybe fell a little bit flat on the market, but ultimately a company that Sam Altman is steering to have yet more and more command of the industry and yet more and more of command of private market dollars. Are you going to keep on reallocating there? Do you think that these companies should stay private for as long as possible?
Yeah, my view is OpenAI is doing great, and whether it's public or private, it'll do roughly the same thing. So if I have to pick OpenAI's trajectory by 2030, which to me feels phenomenal if we can achieve it, I don't really care about short-term or long-term. Obviously, if it's if it converts to a regular stock corp, B Corp, it'll be better for the company. But either way, the model innovation will continue. And I do believe they're in a very good position to lead the race for AI. Though AI will be a competitive area, I don't think it'll be dominated by one company. Anthropic's doing a good job. Google's doing a good job in terms of technology. So I think we'll continue to see innovation.
How's xAI doing? And how much of a distraction is the xAI, OpenAI feuding?
Well, I think Elon has put together a good team. So they will do a good job, and they have the resources. So I think they're doing a good job. Right now, I'd figure they're not only behind OpenAI and Anthropic and Google, they're also behind Meta and the Llama models from Meta. But they're doing a good job. They'll try and catch up. We'll see how it goes. I think the more interesting thing Elon is doing is his bipedal robots. My personal belief, and this is where the auto industry has no situational awareness of this, if I can be a little impolite. Those humanoid robots will be a larger market in the next 15, 20 years than all of the auto business. You know, when I said, if I'd suggested 5-7 years ago that Tesla would be more valuable than the next 10 auto companies combined, and I know their stock price has been going down, everybody would have laughed with me. They will laugh today if I say the humanoid robotics business will be larger than the auto business in the next 20 years. People don't give it much credibility, but I'm almost certain that's going to happen.
Well, the writings you've been doing...
Talk about a prediction nobody expects.
Well, you're a man who makes predictions, and your predictions are often spot on. So Vinod Khosla, it's always a joy to have you on the show. Thank you for coming on. You've got to take to the stage alongside, of course, Limbic CEO, who is all about the artificial intelligence impact on mental health. Khosla Ventures founder Vinod Khosla across physical AI and indeed in the application of generative AI. Let's take a quick look at the public markets that Vinod ignores, but the market is currently in a volatile state. S&P, Nasdaq 100, we're also looking at what the Chinese companies are currently up to. Golden Dragon is currently up by 2 percentage points. We've had a lot of innovation from the models coming over from the likes of Alibaba and Tencent in recent weeks. Even in Foxconn from Taiwanese companies, Nasdaq 100 still under by 0.3%. Remember, it had its worst sell-off since 2022 yesterday, off by almost 4%. The S&P 500 underwater. We focus in on tariffs and indeed on an energy state of emergency. Coming up, we're going to be speaking with a key CEO. The Snowflake CEO is going to be speaking with us, Sridhar Ramaswamy. Live from Las Vegas, this is Bloomberg Technology.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome back to a very special edition of Bloomberg Technology. We are live from the HumanX conference right here in Las Vegas, and it's time now for Stock of the Hour. We're focusing in on Snowflake. We are currently seeing, of course, a bounce back in shares across the board after yesterday was a pummeling for all parts of the market, whether you're in technology and well beyond. We're now currently up 2.4% on Snowflake. And there's some sort of reporting market chatter around a potential Snowflake AI security deal, potentially with Google, but we can get into all of that with CEO Sridhar Ramaswamy, who joins us now. And the context is one of public market anxiety, but private market exuberance around generative AI, adoption of generative AI,
That's right.
but also deals to be made. How are the conversations you're having with your customers, with the CEOs that you speak with, going at this moment of public market worries?
I mean, most projects at Snowflake are about the medium term and the long term. They have a specific goal in mind. We want to either reduce expenses or help our customers make more money. From that perspective, it's absolutely business as usual. All of us obviously watch the markets, and they are an indicator of how confident we all feel about our future. I feel fairly confident that that part will settle down. At Snowflake is business as usual. Lots of interest in AI, how people can get value from AI. We went through a year of investing in the core fundamentals of AI. We now have thousands of customers using it. And we are all focused on, okay, what's the big value creation items we can create from here on?
I mean, the data is always integral when it comes
right.
to Snowflake, the application of the data, and ultimately, what are the return on AI investments your customers are seeing?
Well, we decided to go the long and the hard route when it came to AI. When you're working with Snowflake, first of all, you pay us on consumption, so there's no upfront commitment to some multi-million-dollar deal before people are getting any value. So we very much focused on what are different kinds of chatbots that people could be creating. What are ways to give business users access to data in a very quick way without needing to go through painful dashboards, slow analysts, things like that. And the next generation of applications that we are helping our customers build on top of these. What are workflows now that we can begin to automate? How do we put tools in front of people? Our own salespeople, for example, that centralize all of the information that they need to do their jobs. Those are the things that we talk about. And every project that we do at Snowflake, Caroline, is focused on value creation. We don't recommend investment for the sake of investment. And that just gives us a pretty rational framework in which to have these conversations. Every project needs to deliver value.
And I'm a CEO that you're pitching, trying to invigorate me with the idea of updating my legacy software, ensuring that I got access to the data I need. What's holding me back as that CEO right now from saying, sure, Snowflake, right here, right now?
Every migration takes time.
Yep.
Every migration induces business risk. The old system has to keep functioning till the new system can replace it perfectly for all of the use cases that they used to serve. The act of navigating this is absolutely a challenge. This is where we have a lot of expertise. We have done migrations from every kind of legacy system possible. So we plan these projects out. Some of these projects can take a year to get done because they represent 20 years of investment on the part of a company to get their data house in order. So that process is slow. But what AI has done is vastly increase the impetus for getting data into modern platforms so that you can then begin to iterate on how do you create additional value on top of that. Maybe you had a supply chain system before and it's working okay, but can you optimize it? Can you optimize how you purchase? That you can do much more on a flexible platform like Snowflake than the legacy platform.
Right.
And how do you give real-time access to this data to all of your business users instead of running daily reports? That's the kind of thing, for example, that we do very effectively with partners like Blue Yonder, because they can not only modernize, but they can also let their customers do things on top of Snowflake that they would never have been able to do. It's that imperative that drives a lot of our conversations.
You have partnerships. You've got partnerships with Microsoft and OpenAI. You're also thinking about the food chain of venture, and you're investing in the latest startup to build upon your applications and on your own technology stacks. But there's also, in this, I'm giving you 30 seconds to answer this, but the talent pool. You're investing in a talent pool, but how confident are you that we can have great talent in the US when we're perhaps cutting back on university funding?
You asked 3 separate questions to answer in 30 seconds.
We like to do that in the media.
Absolutely, partnerships are important, and we have them with the best model makers in the world. And what we are able to offer our customers with partnerships with OpenAI and Anthropic is this guarantee that these models are a part of Snowflake. They don't have to worry about what happens to their data, how it is logged, how it is used. We make the same guarantees, which is our customers' data is used only for our customers. We are investing in a startup ecosystem, different companies that are building on top of Snowflake, because we think access to the customers, to the data, to the technology that we provide can greatly accelerate their go-to-market.
Right.
But the final question is really the world of AI 5 years from now is going to end up with a set of very different skills needed for doing day-to-day jobs of all kinds compared to what it is today. This is where things like investing in education, upskilling people, making sure that they have the skills and to be able to build on the talents that they have to be ready for this new world. That's sort of how I think about it step by step. They're different constituents, but they're all equally important.
You managed to do it all in a little over 30 seconds. The Snowflake CEO, it's so important to speak with him. I'm lucky enough to be going on stage with him a little bit later. Sridhar Ramaswamy, a joy to have you here. Let's get a quick check on these public markets. The Nasdaq 100, as we'll see, it's been a volatile trading day amid the barrage of news when it comes to tariffs and indeed when it comes to an energy state of emergency in the US. We're off by 0.5%. This is Bloomberg Technology.